everyone, and welcome to Spark Rentals broadcast live from Facebook and our podcast. Please, if you're joining us, let us know where you're joining us from. We don't like to just talk to the air or each other all the time. And so if you joined us last week, you saw that Brian interviewed Rick Orford, and it was an awesome interview. He's really a cool guy. And today we're gonna touch base on a touchy subject, which is with cap rates down, should you invest in real estate? And with that being said, Brian, go for it. Let us know.
All right. Well, over the last year, there's been a troubling trend for rental investors, at least, and that's that home prices have skyrocketed. So according to Zillow, home prices nationwide are up almost 11% year over year, but rents are basically flat for the year. Rents have risen less than 1% nationwide, and in the largest cities, prices are significantly down, or prices are significantly up rather, and rents are way down. Like in New York City, for example, prices are up nearly 9%, while rents are down over 9%. And that trend you can see in all of the largest cities in the US. So in LA, prices are up 9.5%. Rents are down slightly. Chicago, rents are up over 8%, while rents are down nearly 3%. In Boston, it's even worse. Prices are up almost 11%, while rents are down over 6%. And in San Francisco,
don't you find it interesting, though? I mean, if housing prices are up, less people will be able to afford to buy. So you would think more people would rent and our rent prices would go up, but that's too simple, right?
Well, there's a couple of things at play here. One being the eviction moratorium. So, landlords can't eject non-paying tenants. And, there's been particularly high unemployment among lower wage workers in the US. A lot of the industries that got hit super hard, the service industry, the hospitality industry, you do have a disproportionate number of renters in those industries, whereas a lot of professional jobs and white-collar jobs, have been, those industries have largely remained unscathed throughout the pandemic. So those people have had consistent buying power, and in fact, maybe even extra buying power from all the stimulus money they've received, but didn't actually need. Whereas a lot of lower wage people really did get hurt by the pandemic, did lose their jobs or did lose income, maybe reduced hours or, what have you. So, it kind of makes sense that, middle and upper class people who tend to be the bulk of homeowners, they've done pretty well actually during the pandemic. They've wanted to go out and buy properties with more space. And, there's been this kind of lunge for real estate, particularly as fears of inflation have stoked as well, with trillions upon trillions of dollars of stimulus spent. A lot of middle and upper class Americans are worried about inflation, and one way to protect against inflation is to buy real estate, because you lock in your monthly payment for the next 30 years, as opposed to renters. The rents are going to probably go up year after year.
Right. So it's interesting. We had an office meeting at my real estate office, and one of the things they were saying is because the entertainment whole business went down, so people couldn't do things, they were opting for larger homes because budgets for entertainment were like slashed. So they were looking for more space to be able to just do more in homes. And we're definitely seeing that here in Pennsylvania.
Oh yeah, no question. You've seen that across the board. So, the bottom line trend, or the story over the last year, real estate wise, is that, or at least for investors, is that cap rates and gross rent multipliers are looking uglier in the US. Prices are higher, rents are either lower or have stayed flat. So it's more expensive to buy the same amount of rent. Is the bottom line for rental investors.
So what is your prediction in all of this?
Well, so I expect rents to rise a little faster over the next 12 months than they did in the last 12 months. We're going to likely see the eviction moratorium lift at the end of June. I actually don't think that will be extended a fifth time or whatever it's been.
Oh
I do
man,
think
I
that
hope not.
I do think that is where the buck will stop. So when the eviction moratorium lifts, that will ease some pressure there. And we're already seeing the service and hospitality sectors rebound. So those jobs are coming back with a vengeance. But I don't expect rents to rise enough over the next 12 months to catch up with the lift in home prices, both that we've seen in the last 12 months and that will continue going in the next 12 months.
Right.
So, we are going to see rents start to rise some more, but it's not going to be enough to offset this huge differential in how prices have risen versus what rents are doing.
So do you think that properties are out there?
Yes, there are always deals to be found. Now, that doesn't mean that it's necessarily easy to find those deals right now. So that is one option out there for real estate investors who do want to continue buying properties directly, is you can find off-market deals. You can find excellent deals from distressed sellers, people in foreclosure, people getting divorces, people whose properties are in tax sale, or people who inherited properties that they don't have any interest in. You can find these off-market deals, people that haven't hired a realtor and listed their property publicly for sale, but who would be open to selling, making a quick sale without necessarily marketing at a top dollar. So you can use tools like PropStream, for example, to find some of these distressed sellers. That's Deni's favorite tool, actually, for finding some of these off-market deals. So definitely check out PropStream, and we'll put a link to that in the comments here as well. And you can also use strategies like driving for dollars, where you drive around and look for properties that are clearly run down or vacant, or where the owner is just obviously not taking very good care of it or putting much interest into it. And there's a good tool you can use for that too, called Deal Machine, where you literally snap a photo of the property with your phone, and then the app will actually pull up all the public records for that property. Cool. Yeah, it'll pull up the owner's information and their contact details, and if you can even click a button to have your account send out letters or postcards to the owners of these properties. So those are two tools that we like a lot for finding some of these off-market deals. It's really hard to find good deals on rental properties on the MLS right
now. It is.
So yeah, you're going to have a really hard time if you're trying to compete with every Tom, Dick, and Harry who's looking at the MLS, right? Right. These are all publicly listed, and you can find other. You can find better markets to invest in. You can invest out of state, find cities with better cap rates or better gross rent multipliers. So, you can check platforms like Roofstock, which is a really good platform for buying turnkey rental properties long distance. The last stat I saw from them, it was something like 62% of the transactions on Roofstock are from buyers who are more than 1,000 miles away from the property that they're buying. So it really is designed to make the process easy for long distance buyers to buy rental properties. And they include all kinds of cool resources and tools for out of state buyers, and a bunch of guarantees actually that you'll come out ahead. One of their guarantees is that if you buy a vacant property, that you'll have it rented within, I think, 30 days. Anyway, you'll have to. It's been a little while since I've been on Roofstock, but check it. But they've got several guarantees you can check out, and we'll include a link to Roofstock as well in the comments here. And you can also go through turnkey property sellers. Like, we have a friend of ours, Ali Boone, who is the founder of Hipster Investments, who actually is going to be joining our show in a couple weeks here. She'll be coming on as a guest. She operates in a bunch of markets. Like, I know she works in Indianapolis, and I think she works in some markets in Ohio as well. We're a good friend of ours is Drew Sidgett, who operates Logical Property Management up in Michigan. And so you can go through these kinds of turnkey sellers who will help you find rental properties that are good deals and cash flow well, And then in some cases, like Drew, I mean, he wants to become a long-term partner with you. He's not trying to just sell you something once and then disappear. He wants to manage your property for you, if you would like, but really form a long-term partnership with you. So, those are some trust indicators that you want to look for when you're buying rental properties long distance.
It's like the term you use, skin in the game.
That's right. Exactly. And if you're looking for some ideas for cities that are not in your backyard, or markets that do have strong gross rent multipliers, which means low price to high rent ratios, we do have a interactive map that we've created and that we update every month or two with the top 100 cities in the U.S. and their gross rent multipliers, along with their median rent and median property price. So we'll put a link to that as well here in the comments.
Which it is. So now in my area, it's like ridiculously crazy, and there are some other areas that are just nuts. What area do you notice a similarity in these places, or like Pennsylvania is one. I know Florida's picking up. I was just there, so.
Yeah, so a lot of secondary markets have done really well during the pandemic. The most expensive cities have not done as well during the pandemic, but markets like Austin, Texas, Memphis, Tennessee, some of these kind of secondary markets that are major cities, but they're not the largest, most expensive cities in the US. A lot of these places have done well. Suburbs of major cities have done pretty well over the last year. Vacation hotspots, or tourist towns that are inherently beautiful or have some inherent attractions to them, like beach towns, ski towns. These places have done pretty well in the last year, real estate price-wise, which actually makes them not fantastic places to invest in rental properties necessarily if the prices have been spiking.
Right.
So we put together a couple interactive maps as well of some of the hottest real estate markets over the last year. These are not necessarily markets where you want to buy rental properties, but it's just something to be aware of as a real estate investor, where prices are going through the roof right now.
It's crazy too, because when the pandemic first started, they were dropping. The home prices in vacation areas were dropping drastically. Then when it started lifting, people didn't want to travel too far, but they didn't mind traveling, if it was close enough to their home, to mountain and shore resorts. And then all of a sudden they just went nuts. So it's funny how you don't know. You just don't know.
That's true. I mean, we pretend we have a crystal ball, but I mean, the future is uncertain for all of us. So
that's for sure. So what are some other alternatives that people can still keep investing? Because it is not a bad investment.
Oh, sure. Yeah. I mean, our whole business then is around helping people invest in real estate. So, we obviously love investing in rental properties directly, but that's not the only way to invest in real estate. You can flip houses, of course, which in this market, this has actually been a really good market for flipping houses with homes appreciating so fast. That being said, 2006, 2007 was also a good market for flipping houses. And then a lot of people got stuck holding properties that, they suddenly couldn't sell. So you do have to be a little careful when prices are skyrocketing so fast. You can also wholesale properties. That's another way of kind of indirectly investing in real estate. You can buy shares in publicly traded REITs, real estate investment trusts. These, I don't love publicly traded REITs for a couple reasons. One is that because they're traded on public stock exchanges, they tend to move in too much correlation with stock markets. And to me, one of the huge benefits of investing in real estate is to not have that correlation To benefit from the diversification of asset classes, you want your assets to move
in different directions.
Differently.
Yeah.
In different directions from each other. You don't want too much correlation in the market movements of your asset classes. So that's one reason I don't love publicly traded REITs. I also don't love the fact that under SEC regulations, they have to return 90% of their profits to investors in the form of dividends, which sounds like a good thing for investors, and it means you end up with high dividend yields. But it also means that these funds can't actually go out and buy more properties because they have to return all their profits to investors as dividends. So they can't reinvest any of those profits to buy more properties, build their portfolios. So they don't have much potential for growth and appreciation in their their share prices.
So it's probably a good way, to get involved in that, but don't make that your whole, real estate portfolio.
Right. So yeah, I have some shares in publicly traded REITs. I'm not saying you shouldn't buy them. Like you said, Deni, they make a good kind of minority share in your portfolio, a very small share. I'll tell you what I actually like more than publicly traded REITs is I like real estate crowdfunding platforms. So some of these operate as private REITs. They're not traded publicly on stock exchanges. You buy them privately directly from the platform. So one example of these is Fundrise. They have a few different REITs that you can buy. So Fundrise does mostly residential apartment buildings and that sort of property. Streetwise is another one, and they do more commercial properties. And I like Streetwise because, first of all, they have a really strong dividend. They've been returning between 8 and 10% annual returns, dividend-wise, in dividend yields since inception, basically, even throughout the pandemic. So yeah, I like them. Now, some of these crowdfunding platforms don't just own properties; they lend money against properties as well, and those can either be in the form of REITs, like Fundrise. You can choose whether you want to have more of your money in actual funds that own properties versus more money in funds that lend against properties more.
Right.
Or so one other platform, a crowdfunding platform that I really like is Ground Floor, where they're a hard money lender basically. They lend to people who flip houses, who buy a property, renovate it, and then sell it, or developers who build properties on vacant land. But you can actually pick and choose on Ground Floor which loans you want to fund, and you can lend as little as $10 toward any one of these different loans. So you can really diversify out, a little bit of money to a lot of different loans secured against these different properties around the U.S. And it's a short-term investment. You get your money back usually within 6 months or a year, as opposed to Fundrise and Streetwise and some of these other real estate crowdfunding platforms. They really expect you to leave your money in for at least 5 years. And in some cases, they penalize you if you try to take your money out early. Whereas Ground Floor is a short-term investment. You usually get your money back within a year in most cases.
Gotcha.
So,
Christina,
and we've got links to all those as well that we'll share.
Christina mentions what I am noticing lately is everybody is creating a course and going the coaching route, which is for all things.
Sure. I mean, we sell a couple courses. It's a relatively minor component of our business. We sell landlord software, and then we do a lot of free education as well. But yeah, I mean, that's been a popular business model increasingly over the last 5 years, and some people do really well with it. And there's just a huge variation in quality among those courses. Some of them are outstanding, some of them are not as great, but that's business, right? I mean,
it is. It definitely is. But I mean, there's so many niches in real estate. It's nice that there are courses, for whether it's land investing short term or like what we do is just hold and buy and hold. So it's nice to be able to get that kind of information and mentoring.
Yeah, absolutely. And, I mean, we're partnered with Mark Podolsky's Land Geek course. If you're interested in land investing, let us know. We can send you a link for that as well. And it's something that we have started doing ourselves more, is investing in land. Um, for a couple of reasons. I mean, one, because of some of these trends we've been talking about for the last 15 minutes, but also because we're a little concerned about the way regulation is headed, or at least I won't speak for Deni. I'm a little concerned about how residential real estate and rental properties are being regulated in the U.S. and the trend that that's moving in. Kind of anti-landlord, much more tenant-friendly rules and regulations. And you can see it in how the eviction moratorium has been extended 4 or 5 times now.
Right.
So land is basically unregulated. It's effectively a commercial transaction. So, and you don't have the headaches of tenants calling you at 3 a.m. complaining that a light bulb burned out. So,
nope. Just dirt.
yeah, exactly.
And
then, before we wrap up, one other thought that is worth sharing as far as alternative ways to invest in real estate. You can invest with us if you want. We are, I know we've been saying this for like a year now, but we are going to be rolling out co-investing properties where you can buy fractional shares in rental properties that we own ourselves. So I mentioned Drew Sidgett a few minutes ago up in Michigan. So we're working with him on a property right now, and we're going to be releasing it out to a few people on our waiting list who asked to be notified when we do our next co-investing property.
And this is such a good way. This is almost better than a course, because now you're invested in it and you're learning the steps along the way.
Yeah, so you will obviously see all the behind the scenes of what that looks like, buying, renovating, renting out this property, because you'll be a fractional owner of it, and we'll be broadcasting all of that behind the scenes weekly with it. So the way that will work most likely is selling shares in increments of 1% ownership of the property. So if you're interested in that, just either shoot us a comment here or leave us a comment in the on Facebook, or you can email me at brian@sparkrental.com or support@sparkrental.com, and we'll add you to the waiting list for that.
Absolutely. So do you have anything else for us, Brian?
No, I'll just do a quick recap of what we talked about today. So, we talked about how prices have been skyrocketing. Home prices in the U.S. have skyrocketed over the last year, but rents have stayed flat in many markets or dropped in a lot of the largest cities. Talked about how rents will probably rise a little faster over the next 12 months, but not as fast as home prices, and certainly not enough to catch up to the difference in how those have diverged over the last 12 months. One way that you can still find good deals is to pursue distressed sales and other off-market deals. You can do things like driving for dollars, using tools like Deal Machine. You can use tools like PropStream to try to find distressed sellers. Or you can try to look for markets that still have good cap rates, good gross rent multipliers. You can use tools like Roofstock, go through turnkey sellers like Ali Boone or Drew Sidgett. And we put a couple links to where you can look at the top 100 cities in the US by gross rent multiplier. A couple alternative ways to invest in real estate: publicly traded REITs, private crowdfunding investments like private REITs, and putting money towards loans secured by real estate, or co-investing with us. So reach out anytime with questions.
Edwin and Christina both would like some information on that. So just shoot us an email, either at brian@sparkrental.com or support@sparkrental.com, and we'll get you on that list.
Yeah, so Edwin and Christina, we'll need your email addresses to add you to the list, the wait list. But and the wait list is not super long. We're going to be releasing this first one that we do just to people on the wait list. We're not publicly advertising it or we're not trying to like raise money here. This is purely among like our quote inner circle of people who who have worked with us before and who we know and like and trust, and because we are going to be partners on a real estate deal.
Absolutely. And we definitely have a passion for teaching and providing, the knowledge and whatnot.
Absolutely. Learn while you earn.
Yes. That's the best way to do it. Well,
Deni, anything else you want to add before we wrap this up?
No, I think that you pretty much covered a lot of this. It's a lot of information, but a lot of good information. I know we have seen many people worried, about real estate and, hold real estate because of the moratorium primarily, because it's really kicked some of the landlords of just 1 or 2 or 1 to 4 properties big time. So, I think this is some good alternatives.
Sounds good. Well, let us know what you guys want to hear about next week. These Facebook Live broadcasts and podcasts are really all about you and what you want to hear. It's not, Deni and I don't do it for our health. We're not up here just to chat with each other. This is really all about you guys. So stay in touch. Let us know what you want to hear about. Shoot us a message over Facebook or shoot us an email at support@sparkround.com. And we will catch you next Tuesday.
Absolutely. Have a great day.
See you later.